boy, oh boy, once people got the picture that we are printing like record number of dollars here, right about October, it became real. And then that money hit the economy and boom, you could just see what happened. So if we start quantitative easing again, albeit definitely not to this degree, but to some degree, that's what's going to provide us the fuel to really get going. This was the China bans Bitcoin sell off. We immediately recovered that. But right about here, the Fed started making noises. Hey, we're going to start raising rates. And this was quantitative tightening, this whole slope down quantitative tightening. And all the way across, ironically, we've still been in a quantitative tightening regime, even though we hit new highs. So that's actually pretty interesting to watch. Now, let's continue on here. Echoing a similar sentiment to Hayes, Real Vision chief crypto analyst Jamie Coots said that QT is effectively dead. He explained that Treasury volatility has calmed down following the US dollar's drop earlier this month, which is a positive sign for boosting liquidity. If you remember, Bitcoin is all about liquidity. In fact, there we go. This is the global M2 money supply chart. Global M2 money supply is just how many units of currency exist in the world. And that is essentially a proxy for liquidity. You can see these move a bit inverse to each other because there's a lag. So when you put a ton more money into the economy through more liquidity generation, more money printing, it takes a while to work its way down from banks, from the government to banks to loans to individuals, then into assets. You can see here that basically we are just at this nadir, this bottom. We hit this bottom. You can see here that in September of 22, M2 money supply hit a top and it continued to grind down until January 5th. So from September 22nd, January 5th, that's like what, 2.5 months ish? Let's call it 10 weeks. And you can see that Bitcoin's price, even though liquidity was dropping, Bitcoin's price was still rising from this previous big boom on pink. This pink is the liquidity that's rising, and then Bitcoin rises 2 months later. Then this starts dropping. Then 2 months later, Bitcoin starts dropping. You can see liquidity bottomed January 5th, and which is about 2 months ago, and it has been booming ever since. And so you can now see 2 months later from that bottom, Bitcoin and crypto, I think, are going to make a big turnaround right here because that liquidity that started to get shoveled into the economy, like putting coal in a furnace to keep the train going, that started the increase on January 5th. So now here we are about, yeah, we're almost 10 weeks out. So we should see basically almost an exact turnaround here. It's 2 months later, and then boom, you see this thing start to take off. That was the bottom of Bitcoin, and then we start seeing it move back up. So the Fed has significant leeway to loosen up, providing more support for businesses and markets. So that's a good thing for us. The dam is going to break. Meanwhile, crypto market sentiment has spiked following the Fed's comments. Fear and greed index, which tracks overall sentiment, has moved into the neutral territory after lingering in the fear area since February 26th. If we take a look at this, I'm going to move this over here. Right now, we are at 49. And today, maybe it'll be a teeny bit less. But if we look at the last month, we started off up in the 50s. Things started looking a little bit better, and then just fell off a cliff during that big crash while I was in Puerto Rico. And we actually hit 10. We hit 10 out of 100 on fear and greed, which is the lowest it's been almost in history. That should have told us that's it wasn't quite the bottom, but it was really damn close. I think that was when Bitcoin hit 78,000. It closed the CME gap. And then maybe a week later, it hit 77.6, but that was it. And there's only been a handful of times down here at this 10 level that we've ever been that low. It's pretty remarkable to see that the last time that Bitcoin was at a 10 out of 100 was the summer of 2022 when Bitcoin was around $20,000. And that was like extreme fear. This time we were, instead of $20,000, we were at 77, 78. So, 3.5, well, not 3.5, 3x, a little bit higher than 3x, 3.5x higher in price, and yet fear was just at the same level. So that's the get long and chill method. So, Kane Warwick said that, quote, I would need to see a much larger breakdown in price to flip bearish. My baseline thesis is the 4-year cycle holds once again, which means we keep grinding up through the rest of the year. I agree, and I still think that's where we are. Another metric I've started following was the crypto, the coin market cap fear and greed, because this has to do with all altcoins as well, not just Bitcoin. And you can see that during that crash, we actually hit a record low. Now, this one hasn't been around as long. The regular fear and greed has been around since the beginning of 2018, so far longer. This has only been around since July of 23. So it's only been around since this bull market, basically. And it just hit a record low of, I think it was 15 or 10, 15, I guess, out of 100. It's the lowest it's ever been when Bitcoin hit 78 grand on March 10th, I suppose. So yeah, it that was extreme fear, and now we're kind of moving back up there. So I think people are starting to go, okay, maybe we're not in for a massive recession. Maybe we can bounce out of this. Now let's continue on. A lot of the talk now is on recession. Is the US going to end up in recession? So this was kind of interesting is that BlackRock, of course, they are incentivized to have this position. Of course, they own a ton of other things that are not Bitcoin. So it's not like they're just constant Bitcoin bulls, but a US recession could be a big catalyst for Bitcoin. Now, this was pretty interesting. Bitcoin would be a big winner from a potential US recession as it's built to thrive in a high fiscal spending, low interest rate environment, says a BlackRock executive. So Mitch Nick said that Bitcoin is catalyzed by increased fiscal spending, true, deficit accumulation, true, lower interest rates, true, and monetary stimulus, true, all of which tend to happen in recessions. So it's also catalyzed by some extent over fears of general social disorder. People go, oh shit, things are getting a little violent around me. I better put my money somewhere safe where someone can't steal it from me. Um, Risk on assets such as stocks, commodities, and high yield bonds tend to suffer during times of economic crisis. But Mitch Nick said in September he believed that this asset was mislabeled. That's where the opportunity comes in for education in a market and an asset class that's still very nascent. Most people still don't understand Bitcoin at all. So he added that some of BlackRock's more sophisticated long term accumulator clients see the market correction as a buying opportunity and aren't bothered by current economic headwinds. He also mentioned that there's been a huge outflow of Bitcoin ETFs over the last 2 months. So where was this? I thought this was in this article. There we go. Yeah, he wasn't worried about the mass outflows across most spot Bitcoin exchange trade funds at late, pointing out that this has mostly come from hedge funds unwinding the spot futures arbitrage trade, not the long term buy and hold crowd. So basically, a lot of people were going and buying the ETF, riding the upward move, and then shorting the CME futures to create kind of a neutral cash and carry trade where they could just arbitrage the difference, for like a 5-6% spread. Ironically, if they just bought Bitcoin and held it, they'd be up, several X. But instead of that, they try to be all slick about it. And I get it; they're taking no risk doing that. But anyway, yeah. So BlackRock doesn't seem to be too perturbed about this, and kind of feeding into that, they had said they're not really seeing much loss or drop, if you will, in the long-term investor, just the hedge funds that are getting in and getting out. This is pretty interesting. So long-term holders continue to hold profits despite Bitcoin prices dropping to a near 4-month low, indicating a strong belief in the bull market rally that would eventually resume. So long-term holder activity remains largely subdued, with a notable decline in their sell-side pressure, said Glassnode, who tracks all of these things on chain, in a March 18th markets report. So long-term holders show signs of bullishness. The binary spending indicator, a metric used to determine when long-term holders, those are people, by the way, defined as holding their Bitcoin in crypto for more than 155 days. Behaviorally speaking, if someone holds for 155 days, they're far less likely to sell. So basically, this metric used to determine when long-term holders are spending a significant portion of their holdings, aka selling, in a sustained manner, shows a slowdown, while the long-term holder supply is also beginning to rebound after several months of decline. So basically, some long-term holders have been dropping their bags, and now they're starting to turn it back around and increase those again. So this is perhaps a shift in sentiment with long-term holder behavior moving away from sell-side distribution. So if you look at this, the black line is the Bitcoin price. Orange line is the overall long-term Bitcoin holder supply. So supply is up, up, up. Right around here, we can see a couple different waves here. So long-term holders are holding, 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 holding. And then in January 24, they start distributing and dropping down to a low supply. So they're selling into strength back around the move from 40K up to 60K. You're getting back to those previous all-time highs. And then they drop to a low as the market starts moving down or moving down. And as the market moves down, they start increasing their exposure. They reach a maximum exposure right when Bitcoin basically hits its bottom from the summer. So they're buying the dip, buying the dip, buying the dip. And then as prices start to rise, they start slowly selling into that volume, right? So long-term holders have been selling big time, actually, ever since the last summer. Selling, 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 hitting a bottom right as Trump takes office, essentially. We get that peak right there. And then they have been accumulating on these drops. So basically, they're, the long-term holders aren't necessarily like the forever holders like me. They are people who are willing to hold for a little bit longer of a period, but they're not day trading. So, bull market tops are often marked by intense sell side pressure and strong profit taking among long term holders, which signals a complete shift to bearish behavior. However, despite Bitcoin's drawdown in recent weeks, this investor cohort continues to hold a large portion of their profits, especially for this later stage of the cycle. This could suggest long term holders may still be expecting more Bitcoin price upside this year. So, long term holders have been taking some profits, but considering where they came from, like this chart doesn't even go back way, way, way back there, um, they're still in really good shape. So, an interesting observation may indicate a more unique market price or market dynamic going forward. New Bitcoin whale accumulation reshapes the markets. This is interesting. This is kind of a new thing here. New Bitcoin whales, addresses holding at least 1,000 Bitcoin, where each coin has an average acquisition age of less than 6 months, are aggressively accumulating. These wallets have collectively acquired over 1 million Bitcoin since November 2024. Guys, that's a 20th of the supply, or 121st of the supply, positioning themselves as one of the most influential market participants. They've accumulated more than 200,000 Bitcoin just this month, just since these big price dips. So they've really been dropping big money into this market. That's not something you see during bear markets. So they just continue to move up and to the right of their overall supply holdings, which is pretty wild. Now let's talk about this. This is kind of interesting. So Trump is going to speak at the Digital Assets Summit. This would be the first time a sitting president, rather than a potential president, has spoken at a crypto conference. Pretty wild. And that is by Blockworks. It's happening on March 20th. So that should be what, today? Yeah. So I guess we'll be paying attention for what he says. It's a pre-recorded video, so we'll see what happens in the markets. I don't know if we get a little sell-off because everybody's expecting him to say something crazy. We're going to start buying 1 million Bitcoin. Who knows? Trump's presence at the event underscores his embrace of the industry that under the former president Joe Biden was the target of more than 100 enforcement actions by federal regulators. A lot of these are bullshit. Now, a lot of them were valid for scams and things like that the SEC should be pursuing, but a lot of them were bullshit. And they've dropped the case against Ripple, Uniswap, OpenSea, Yuga Labs, Kraken, Coinbase, Genesis. There's so many that have been dropped. Ripple, so on and so forth. So anyway, it's just saying this is a big deal. On March 19th, Brad Garlinghouse, CEO of Ripple Labs, announced the SEC was dropping its years-long enforcement action against a blockchain developer while at the summit. Since Trump took office, the agency has dropped charges against other crypto firms, including Coinbase, Kraken, Uniswap, so on and so forth. So that's really, really good. So it's going to be a recorded call. Who knows what it's actually going to say today? We'll see. I'll keep an eye out for that, but I guess we'll see. And then continue on. Bitcoin runs towards 86 grand after the Fed maintains its course of holding rates steady, projecting 2 rate cuts this year. Blah, blah, blah. It's going to trim its quantitative tightening policy. It left the option for 2 interest rate cuts for 2025 on the table. So on the presser that was announced, Powell confirmed the Fed intends to leave the rates unchanged, where they've been since December of 24, although the Fed downgraded its outlook for economic growth and emphasized that tamping inflation remains a sticking point. The Fed's statements largely aligned with the market expectations. The FOMC minutes confirmed the central bank will reduce the monthly redemption cap on Treasury securities from $25 billion to $5 billion. So basically that means they're going to unleash $20 billion worth of more liquidity into the market, which is good for us. In response to the Fed statements, Bitcoin price added to its daily gains, rallying to an intra high of 85, basically 86 grand at the time of writing. That's good. The Dow is also starting to bounce as well. Once everyone's talking about recession, it rarely happens. But something that Pomp had mentioned is that you should be scared of a recession when everyone thinks that's the last thing that could ever happen. Just like the top of a bull market is always when everybody thinks it's the last thing that could possibly happen. Just like the bottom of a bear market is always when everybody thinks it's never going to get better. We're guaranteed to keep going down. That's always the bottom. So when everybody is screaming recession, 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 that's not usually when a recession happens.
Hey, this is Brett from Moonstream. If you'd like to learn more about our pro trading signals or our live classes every Wednesday or our Retire Rich program, go over to moonstream.io/start.